Good morning and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today. So to begin with, the first slide as we saw in the agenda will be the previous webinar's questions. We will read them and we will do our best to give the best answer. So the first, let's maybe also open here a notepad so we can, and maybe also make it smaller to fit to the screen. Like this, I think might be enough. And we will simply take the question and we'll paste it here. And then we can also write the notes to answer the question. So the question is, how can different lot size affect the position's value? Okay, that's an excellent question. Let's pick just one of the instruments we see in here. We see that the facility we're using today is the WebTrader. The WebTrader is embedded in the website, which means that you don't have to download or install anything. You can access this interface simply by logging into the website with your email and password, and under trading platforms, just click on WebTrader. And you're supposed to see this is the default screen. Now, as you can see, it's divided to categories, which allows us to select specifically from categories. So we've got Forex indices, cryptos, commodities, stocks, ETF, and bonds. At the moment, what's available for us will be Forex indices, cryptos, and commodities, since the US market isn't open yet. We've got the UK market. Okay, but let's stick with commodities for now to select an instrument and demonstrate the answer for how can different lot size affect the position's value. All right, so from commodities, we'll click on commodities to fold it down. Then we have another sub menus here. We'll click on maybe agriculture and maybe just a second, maybe coffee. Looks pretty good. Oh, it has some analysis on that. Yeah, well, that doesn't bother us in any way. Let's just expand the screen by clicking here on the two arrows to expand the screen all the way up to see a clear picture of what's happening here. And we'll also get the lot size to 0.01. And now it allows us to increase the position to the amount that we wish to make. Now, let's compare here how can different lot size affect the position's value. All right, so as you can see, if we'll compare, maybe we'll put one lot just for the sake of the discussion, and from the other end we'll have an instrument with a different lot size, such as gold, and I want you guys to notice what happens with the value even though they both have one lot. So we've got something called price per unit. There are two different types of units. Since coffee is in bushels, is measured by weight, and gold is an ounce. Okay, it's an ounce. There are two different materials. So we've got different price as well, and different lot size. So the price per unit, okay, we'll write that for both. First of all, we'll write the name of the instrument. So now we've got coffee in here, and price per unit is 376. We're looking at the buy at the moment, and the number of units for one lot is 1,000. All right. All right, and that means that the value is, which displayed in here, will be the interpretation of 376.5 times 1,000, right? Which brings us to the 375,650. Well, now it's 700. Okay, but we're not going to change it forever. We're going to keep it like this. We understand that the market keeps moving and the numbers will keep changing as well. But that's how it works. And now we see that the value is like this. Furthermore, we see also that we have here something called leverage. What is leverage? Leverage multiplies the buying and selling ability for the account for this instrument. Meaning, okay, meaning, just a second, we'll write it down. We don't have to remember this. Okay, we don't have to remember this because why? If I'll click here on the I, it shows me the explanation in here as well, in here as well. You don't have to remember anything if you're using this interface. And okay, now the leverage is 1 to 10, so it multiplies buying and selling by 10. All right, what does that mean? It means that instead of having in my account $376,000, I can have 10 times less. How much is 10 times less? Okay, we'll take the actual value, which displayed in here. We'll divide it by 10, which was already done for us automatically, right? It's already okay. So we did this, and we received as the result 37,000 and a little more, as you can see, but keeps on changing. All right, great. Now this is for coffee and this is for one lot. Let's measure something with a higher value and with a smaller lot size to make this comparison to see the difference. So we've got gold from the other end. We'll copy the what we wrote here. We'll just change the numbers. So if we click on gold and we click on buy, then we see that the price per unit for gold is much different, 3,330. Okay, we'll write that down. Great. And we see that now with gold, the one lot is not equal to $1,000. It equals to 100. Okay, how does this affect the value? Because since, okay, we'll change the numbers and understand through the explanation. All right, so we got 3,330 times 100. Again, we don't have to remember that because using the web trader allows us, it does this for us automatically. Okay, we see that the leverage now is different as well, 1 to 20. And okay, we'll take the value, we'll simply divide it by, this time it's 20. Remember that we divided by the leverage, and we immediately see it cut it by 20. So this will be this will represent 5% of the value. Sorry, this one will be 5% of the value. We'll talk about it in a moment. We'll understand exactly the logic behind what I said. But now I just want you guys to see, even though gold, okay, the value is almost 8 times higher than coffee, still the accumulated value for one lot is around the same area. And how so? Because the value for one lot in here is multiplied by 100 from the original value per unit, and with coffee it's multiplied by 1,000, right? Let's look at it again. Okay, and let's maybe we'll make another comparison with even a smaller value and a higher lot size. So we'll click on silver, and instead of silver, we'll delete what's here up, and we'll place instead of gold, we'll place silver. Okay, and with silver now, if we click on buy, and this time again place one lot at the position size, we notice that now it's 10,000 units, 10,000 units, which brings us, again, if we make, I just don't want to delay about this question too much, but you guys can see, right? The value is 32 per ounce since it's silver, but now since the lot size is 10,000, the value will be multiplied by 10,000. Okay, so for one lot, the value is around the same levels as we calculated with coffee and with gold. Keep in mind that now the leverage is back to 1 to 10. And that means that if I wish to check the margin impact, and now I will explain exactly what that means. Now the value needs to be divided by 10 and not 20, which we saw with gold. Okay, from that we can learn that the leverage can vary between different instruments. Okay, same as the lot size. The lot size can change and the leverage can change, and you should pay attention to that because this has direct impact on your margin impact. But what exactly is the margin impact? So the margin impact eventually is the required amount, the required margin that will be used on your account to open the position. All right, why is that? Why do we need to know that? Well, simply because in this case we can't open the position. And the natural explanation will be we don't have enough margin. Okay, we don't have enough margin. If we'll go back to gold, okay, like this, and we see that with gold, just a second, we'll also place one lot. Okay, even with gold with a higher leverage, which requires lower margin, we're still not able to take the position. Let's try half of that. Okay, half of that we can, but this means that we're gonna use approximately 83% of our available margin. Okay, we're not getting in now into risk money management and the margin comparison usage. Okay, we're just trying to answer the question here on the best side. And to answer the question, we naturally understand that the lot size makes a lot of difference since it's our measuring unit. Okay, and if the measuring unit now is showing us 100, so this 100 will be multiplied by the value. If it's coffee like this with 1,000, so the value will be multiplied by 1,000, which again, as I have explained, has a direct impact on your money, okay, on your margin. Okay, so we'll write down the answer for that. So different lot size has a different lot size has, let's begin with first of all, what is one lot? Lot is a measuring unit. Okay, unit which differs from 10 to 100,000. What has a lot size of 100,000? Who knows what has a lot size of 100,000? So we saw today, we saw 100, we saw 1,000, we saw 10,000 for silver. Who knows what has a lot size of 100,000? Let's see. In the meantime, I'll finish the answer here. Okay, and we need to multiply, when placing one lot, the value of the value per unit will be multiplied by the number of units, okay, which is basically the lot amount, right? The amount is 1,000. So we said the value per unit times the lot amount is giving us the value. Excellent. Lot is a measuring unit. Okay, when placing one lot, the value per unit will be multiplied by the number of units to provide the total value, which can later on be divided by the leverage to know the margin requirement. Basically, the equation here is very simple. Just a second. Price per unit times number of units equals value, and then we've got value divided by leverage equals margin impact. And we've learned that one lot can make a lot of difference. Between different lot size, it can make a lot of difference. The second question we have today is, how can I improve an existing stable strategy? Okay, well, that depends what you wish to improve. If it's already, let's, I think, carry on with gold, since we, with the coffee, since we've already got some analysis, and this can save us time. Okay, and we can see that the value for coffee is now 372. Let's assume at the moment that we have an existing stable strategy, okay, and we are trading coffee, and we are trading, we saw gold, what else? We saw silver, and maybe crude oil, okay, for now. So what we're gonna do, if it's an existing stable strategy, I assume that this strategy will have targets and guidelines. So let's say that the general target for my strategy will be to make with 10,000, let's say 2K a month, okay, 20%, and I am dividing it equally to 50 per instrument with a ratio of 1 to 5, meaning that I'm hoping to make 500 per position, and my exposure will be no more than 100. In other words, 500 times 4 weeks is 2,000, and my exposure 1 to 5. So that means potential profit 500, potential loss 100. What I'm going to do is I will compare potential profit, potential loss. Okay, what I would like to do to improve an existing strategy is basically to check the performances that I had with every instrument, and to first see where my performance was better. Okay, for instance, if I'll compare the past 3 months, let's say that this is monthly, okay, say monthly, like this. Let's suppose that my results 1 month have been, let's maybe write it down like this so it will be easier to understand. We'll compare, let's measure a quarter, I think 3 months, okay, month A, month B, month C, okay. Now, since this is, by the way, this is one strategy out of many strategies, just an example. So strategy should be equipped with a certain level of analysis, risk money management, and margin comparison, which is what I showed you here today. Now, underneath, there are lots of different types of analysis, lots of different risk money management factors that we can acknowledge, taking several factors for exposure, and for analysis, you can use different indicators, so many types in so various ways. But in general, if it's an existing stable, from the answer, we understand that this is not a new strategy. This is a strategy. If it's stable, it means that it was already established, and I guess it's somehow around the necessary goals. If we're not getting to the goals, it's not a stable strategy. So what I would work on will be, so as we said, we have analysis, technical and fundamental. We've got risk money management, and we've got margin comparison. What is margin comparison? I just showed you it. I just showed you, sorry, in the beginning. In the beginning, when we looked at the different lot size, that also helps us assess the value that we're using, which has direct impact to the margin. Okay, now these three key ingredients is something I would mainly pay attention if I would like to improve or even establish a new strategy. What kind of analysis, what kind of sources I'm going to use to do my analysis? Will I use the content we've got in the website? Will I watch the TV, Bloomberg? What will I do to improve my analysis? There are many different ways. Risk money management is the second thing that I'm going to visit. And I will ensure, okay, my exposure, is it at the ratio that I set to myself? Am I exceeding this ratio or am I at my goal? The next thing that I'm going to do is I'm going to look at the margin comparison. What is the margin comparison? Basically, if I'm aiming to make this 500 and expose myself to 100, I want to do it with at least the least margin that I can. If again I am required to use, as I showed you with gold, right? You saw that with gold. Let's make it challenging in here as well. Okay, if for instance, I'm looking at coffee now at 0.25 and we notice that the margin impact at this stage is 9,300. Okay, so this will be approximately 93% of our available margin. So what comparison am I going to make? Since in this strategy, everything is divided equally, I won't be able to take another position like this, right? We all understand. I've got 10,000 available. This needs 9,300. So I won't even be able to take another position, which will be 10% of that position. So the margin comparison allows us to assess what level of margin are we going to use and what benefits we're looking to gain from that. And of course, if we're using stop loss in a stable, existing stable strategy, we need to know what the stop loss can lead us to potentially lose. So those three, we'll delete that because I don't want you guys to be confused. Maybe, okay, we'll put this in brackets. We'll put this in brackets just a second. Okay, 3 months. So we've got, okay, so let's just write down what I wanted to show you. So let's say month A, the results will be, let's suppose the target is 2,000. Let's suppose the result will be we've made 2.7. Okay, that's month 1. Well, I have 3. Okay, we'll have 3 like this. Okay, month 2 and month 3. So while I am making this comparison, let's suppose that in here we've got to the goal, and in here let's suppose we'll make it 1.8. By the way, even if I make, okay, for instance, if I set myself a target of 2,000 and I made more than the 2,000, I'm not necessarily going to be happy about it because I need to know what I did to make this 2,000. If for 1 month I've made 1.7 and I'm supposed to be 2, I'm going to look at those 3 things and see what needs improvement. Is it my analysis? Is it my risk money management? Am I using too much margin, which doesn't allow me to open additional positions? So underneath those 3, there are many different topics, but those are the main that I would look for to improve an existing stable strategy. I hope it makes sense. So of course, what I wrote here is just Just as an example, there is nothing specific in here. You can change the numbers, the ratio, everything. Okay, we're just using it as an example. And as I always say, technical and fundamental analysis should dance together. We cannot rely only on what we see on the chart without knowing the reason of why it's moving. Also, to know the reason without being able to read the chart is it's not really completed, right? We would like to have both ends. We would like to know the why and we would like to know the how. Excellent. So we're gonna take that the answers we wrote here, and we will just a second. We'll paste it. Okay, right here. There are many ways, by the way, there are many ways to improve what I wrote here. It's, as I've explained in our YouTube channel, you can find a lot of useful content, which is exactly that. Analysis fundamental. Okay. Is there a difference? The following question is there a difference between trading in the morning to the afternoon? Well, there is a difference. There is a difference. That depends where you are in the world. But if you're in Europe or Asia, okay, I assume that the morning will be the UK time when the UK market is open, and the afternoon will be when the US market is open. So, of course, there is an obvious difference between trading in the morning to trading in the afternoon because of the news, right? One thing that can really help us out in this case is if you see at the bottom of this row, there is the economic calendar. We've got here this globe icon, and underneath, we've got the economic calendar. So clicking on the economic calendar allows us to see which events and at what times. Furthermore, we can even just a second, we'll filter that out. At the moment, we see everything, okay? But I assume that people have specifics in this strategy. They have specifications, and they don't want to see all the events for everyone. What I want to see is, let's select maybe, let's go with the pound only. Let's suppose that we're only focusing on the pound and maybe the dollar. Okay, in this case, we see and maybe only high impact event. Okay, high impact. You see, we narrowed that down. Now we can only see US and UK event, and we can specifically do the analysis. Now, an additional very nice feature we've got on the economy calendar is to add the event to your calendar, which allows you to, instead of thinking during the day when you will have the time to watch the event and the result, what you can do is you can just add it to the calendar. It's on your phone. It can give you a reminder, and then you can see the result, directly go to the website, the platform, and do whatever you need to do. To my opinion, this is a huge time saver, and really enjoy that. Okay, so this is one way. Okay, so there is a difference between trading in the afternoon to the morning, since, as I have explained, we've got the UK market to open and we've got the US market to open. So that depends on which instruments you're trading. If it's indices like Dow Jones or Nasdaq or S&P, or is it FTSE as an example? And that also if you're trading stocks, so which stocks are you trading? Are you trading US stocks? So it will have to happen in the afternoon, since the market will open in the afternoon, and UK market opens in the morning. All right. Yeah, apart from that, I don't think there are lots of differences. I would just say that for people who work in the morning, Again, this is just my personal opinion. I would rather, sit peacefully after work or at the time that I've got, and then I do it properly rather than to do it in a rush in the morning, just in a few moments, because I want to properly go through the process, assess, analysis, risk money management, margin, and so on. Okay, but that's just my opinion. So we'll take that down and we'll write the answer here. UK market typically opens in the morning. Again, that depends where you are in the world, but okay. US market opens in the afternoon, which, as I have explained, depending on what you're trading, it will be more or less relevant for you. The following question, the last question we've got here is, how can I choose which instrument to add to my portfolio? Well, that's one of the things that I explained just now, right? That depends on your available time frame to trade. For instance, if I am in Australia, okay, if I'm in Australia and I want to trade US market, I want to trade US market and I'm in Australia. This will require me to stay up in the morning to trade at 4 in the morning, right? So we need to use it as an example. And if I would like to trade, maybe UK market will be earlier for me, a bit earlier for me. Okay, but you guys get the point. You guys get the point. I gotta match my availability to the charts to when the instrument is available. And one very nice way to check when my instrument is opened is by clicking buy or sell, just as I'm going to show you now very easily. We can get not only the times that the instrument is open, we can also see all kind of different parameters. So if we took FTSE, as you can see, it's showing us, okay, the times and the days that it's opened. Okay, FTSE is open from 3 to 11, right? That's GMT plus 3. Now, if we look at something else like NVIDIA, okay, as an example, and for NVIDIA, that's 4:30 to 11, right? That's again GMT plus 3. Okay, so depending on my availability and the instruments when it's available to trade, okay, obviously they are, if you see candles like this, that means that the weekend, right? That means that the weekend, and on top of that, there are holidays, which in these holidays, bank holidays and so, the market is not open. Okay, regardless. Now, another nice way to choose which instrument to add to your portfolio is, of course, the how can I explain it? The way that you can analyze the chart. For instance, if at the moment I'm looking at currencies like USD CAD or euro dollar, okay, and I'm looking at this chart, and this chart seems bullish, okay, but I'm not really following what's happened here, even though it's obvious, I mean, right? But never mind. Let's suppose that I don't really like the chart. It's difficult for me to read. I don't know what those things are. Okay, so we can choose a different instrument for comparison, and we can choose what is more understandable for us to analyze. Okay, maybe I'm more into reversal and consolidations. Who knows? Okay, this is another nice way. Another nice way on top of that will be what we spoke about in the beginning. I need to be realistic with the balance that I'm planning to invest. Okay, let's suppose that my account is with 10,000 and I like to trade Nasdaq. Okay, and Nasdaq 0.1 is going to require me to use 90% of my capital. So in this case, I might want to either increase my investment to something more realistic, maybe 50 or 100,000, and then I'll be using 10% of my 9%, 10% of my account instead of 90% of my account. Okay, it's one of the things. It's one of the things. So we spoke about the time availability. Okay, the market when the instrument is operating, right? We saw how can we check it in here, right? In this tab, we can check everything. This is one thing. The second thing we said is analysis. So chart, understandable the chart is. This by the way, it doesn't mean that if, for instance, the chart is okay. Okay, this by the way, this can change. It's not something permanent. We need to understand that the market is fluid and dynamic. Even sometimes an instrument can look like this. Let's take something else just to diversify. Even if the market looks like this, okay, which we can immediately see we're heading to the support line, right? This bit might be a bit advanced for some people, but I guess I would like to give you as much content as I can. We can see right now we're heading from 3.2 to roughly the $3 mark, right? A bit below 2,999. Let's change it as well with natural gas. Okay, so we can see natural gas has been very bearish in the past few weeks. Okay, we're looking at days, so this is roughly a few weeks trend. I know that it might be fast and complicated, but I'm just trying to emphasize to convey a message here. Now, if for instance I'll make natural gas and I see, okay, it seems like it's heading down, and I think it might go another 20 cents down. Okay, well, this seems to me like something that I understand. What we saw with just a second, with Euro USD. Okay, so I'm gonna compare. So let's change it to days. Okay, so let's suppose we're looking at this. Okay, so what does this mean to us? Okay, the general trend is bullish. We saw that, right? We saw that the general trend is bullish, but then we have this bit. So we see that all week it's been bearish half a week, now bullish and bearish again around the same levels. It doesn't break the resistance, it doesn't go below the support. It's around a little more than the middle. Okay, so if this seems to me like something I'm not going to enjoy analyze, no problem. I can decide that this is the power of diversification. I can say, okay, natural gas makes more sense to me. And as we demonstrate prior with the strategy we wrote down, you remember 500 and 100, I can then achieve my goal with a different instrument. Okay, so how can I add a new instrument? This is one of the ways. How readable the chart is. Okay. If I like high volatility and a lot of movements and a high value instrument, I might go with indices or cryptos or something with high value. If I like low value fluctuations and a lot of fundamentals, I might go with currencies, right? As an example, which has a value in decimal. Okay, so how readable the chart is, that will be the third. And lastly, the margin requirement comparison. Okay, as we've explained, if for instance I like to trade Nasdaq, that my account has only 10,000, not mentioning that if my account has $100, like $100, I'm not even gonna be able to take this position with Nasdaq. Okay, so this is also something that I need to think about. How much money I have on my account, how much money I need to have on my account to trade this particular instrument. And as I have explained, even if I have 1,000, okay, I have 1,000, this requires me to use 92% of my balance, 92.5% of my, sorry, not balance, margin. Okay, so this is also one of the choices that I need to make. I can always increase and add more capital. It depends what you prefer to do. Okay, so well, maybe make it a bit smaller so it will better fit to the presentation. And now we have got it. Okay, the following slide, as I have explained, is more informative, which will be to save you the trouble to find those links by yourself on the website. The AvaTrade education will take you to further. I'm going to paste it in the chat. In the chat at the bottom left, you can review the message and see the message that I'm sending to you. AvaTrade education is for more education. It's self-explanatory. The second link is for login and make a deposit. If you're still playing with the demo and you want to get to business and to get more familiar with the market and to practice, you can log in and make a deposit and get to do it for a real account. The second, the help center, is, well, exactly what it means for more formal queries or other questions you may have. And a real account is similar to log in and make a deposit to create a real account. And lastly, the academy. The academy is something that you can also access from the website. And I'm going to show you now how to access the academy without even leaving the website. But before I do that, I would like to give you a special promotion code, which is the Q&A benefit. And what it allows you to gain is one-on-one premium market review with your senior account manager, which can be extremely helpful since you're going to enjoy one-on-one session with someone who is familiar with the market, familiar with the analysis, and can help you improve both of the things that I've said, which are mentioned in here, which is risk money management, analysis, and margin comparison. Okay, which needs to be combined to fully construct the strategy. Okay, so I've pasted in your chat. This is the Q&A benefit which you can give to your senior account manager. And on top of that, I'm going to show you just now how to access the academy without leaving the website. And the way that you can do it is simply, if you see at the end of this row here at the new segment, you have this YouTube icon, maybe play button, whatever you want to call it. And then we've got the academy at the bottom, which leads us to the academy. And we've got here at the top the tutorials, which open the tutorials in different topics, by the way, which you can enjoy. This is the platform review. So you scroll down, you see the topic here, trading basics, all right. And then we've got stock market fundamentals. And underneath, we've got Forex basics. Okay, and lastly, trading knowledge. Now, as I said before we begin the webinar, there is a lot of content on our YouTube channel, a lot of content on our YouTube channel with Mr. Frey and Mr. Friedman and other webinars that can be helpful for you moving onwards. Even if you're not a beginner, even if you're advanced, even if you're a beginner, there is useful content there, which I recommend you guys to explore. All right, unfortunately, our time is up for today. So I appreciate everybody who joined today. I hope that you enjoyed as much as I did and that you've learned, you picked up things that can be helpful for you and your strategy. So best of luck with trading. Join us next time. Until then, have a blessed day and a good week.